Ever wondered how many people become millionaires in a day? Believe it or not, each day sees around 1,700 new millionaires worldwide. That's about one new millionaire every minute. But what really goes into making that million? Is it sheer luck, a stroke of genius, or steady diligence? Today, we're diving into a topic that sparks curiosity and dreams alike: becoming a millionaire. But we're not just talking about any route to riches. We're exploring the real stories and strategies behind those impressive bank balances. From overnight lottery winners to strategic investors, how long does it really take to join the Millionaires Club? The idea of becoming a millionaire fascinates nearly everyone. It's not just the allure of money, it's the freedom, opportunities, and lifestyle that seem to come with it. But behind every millionaire's story is a blend of chance, challenge, and sharp decision-making. Today, we're going to break down some of the most common ways people achieve this significant milestone. And you might be surprised at what it takes. Is it possible to become a millionaire overnight? Absolutely. But chances are, it's not the lottery ticket that's going to get you there. We'll look into how realistic it is to strike it rich quickly, and what other methods have proven reliable for building wealth over time. From the exciting volatility of cryptocurrencies like Bitcoin to the steady growth offered by stock index funds, each method comes with its own set of risks and rewards. We'll also touch on less flashy but equally effective strategies like investing in gold or real estate, and even the slow and steady path of Treasury securities. What does it really take to see that seven-figure balance? How much do you need to start with, and how long do you need to commit? And crucially, how can you maximize your chances of success based on your current financial situation? Finance first, freedom follows. Welcome back to Finc Freedom. So whether you're a hopeful investor, a curious entrepreneur, or just looking to manage your finances better, this video will provide you with insights and tips on how to realistically approach the goal of becoming a millionaire. Stay tuned as we debunk myths, share expert advice, and outline actionable steps to help you build your wealth. Remember, the journey to a million isn't just about the destination. It's about the smart choices you make along the way. Hit that like button if you're excited to learn more, and don't forget to subscribe so you don't miss any of our comprehensive guides. Ready to find out how long it really takes to become a millionaire? Let's get started. Section 1. Lottery. The lottery represents the dream of instant wealth. Become a millionaire overnight without any effort. It's the quintessential example of high risk, high reward. Winning the lottery is more about luck than strategy. The odds are staggeringly low, often 1 in several million depending on the game. Yet, for those few who do win, it can indeed transform their lives in a heartbeat. However, it's important to remember that for every winner, there are millions of others who don't strike it rich. While buying a ticket now and then might be fun, it shouldn't be your financial plan. The lottery is not a path to reliable wealth. It's a gamble. And like all gambles, it comes with the potential for loss. Section 2. Crypto, Bitcoin. Moving on to the modern gold rush, cryptocurrencies. Bitcoin, in particular, has turned plenty of tech enthusiasts into millionaires within a few months, especially during its peak surges. Unlike the lottery, cryptocurrency investing is based on market trends and speculation, not mere luck. The rise of Bitcoin has been meteoric and dramatic. Early adopters who bought Bitcoin when it was just a few dollars or even a few $100s have seen their investments soar to incredible heights, particularly during the peaks of 2017 and again in 2020. Investing in cryptocurrencies like Bitcoin involves understanding the market and timing your investment wisely. It's known for its extreme volatility. Prices can skyrocket and plunge within days, if not hours. For instance, in December 2017, Bitcoin's price neared $20,000 only to fall below $3,500 a year later. Similarly, after reaching highs of around $64,000 in April 2021, it dropped by nearly half in the following months, showcasing the risky nature of this investment. Despite the risks, the potential for high returns makes it an attractive option for those looking to potentially make a lot of money quickly. However, this should be approached with caution. Investors should be prepared to face the possibility of significant losses and conduct thorough research or consult financial experts before diving in. For the savvy investor who can navigate the turbulent waters of cryptocurrency markets, the rewards can be substantial, but the journey is not for the faint-hearted. Furthermore, the world of crypto is not just about buying and holding. Many have also ventured into mining cryptocurrencies, which involves using computer power to solve complex mathematical problems that validate transactions on the blockchain network. While profitable for some, the cost of equipment and energy can be prohibitively high, and the return on investment can vary widely. Section 3. Gold. Turning our attention to gold. This precious metal has been a symbol of wealth and a store of value for thousands of years. People invest in gold not just to grow their wealth, but to protect it, especially during times of economic uncertainty. Unlike stocks and bonds, gold is a tangible asset that historically holds its value and often appreciates when other investments decline, making it an attractive option for those looking to diversify their portfolios. Investing in gold can take several forms. Some choose to buy physical gold, such as coins or bullion. Others invest in gold ETFs or shares in gold mining companies, which can offer easier liquidity than physical gold. Each method has its pros and cons. Physical gold, for example, requires secure storage and insurance, adding to the cost. Meanwhile, gold stocks are subject to market fluctuations and company-specific risks. The journey to becoming a millionaire through gold investment is typically a marathon, not a sprint. Gold's value does not usually experience the rapid climbs seen in more volatile markets like tech stocks or cryptocurrencies. Instead, it sees a more gradual and steady appreciation. Historically, gold has provided a return of approximately 10% annually, but it can vary widely based on market conditions and global economic factors. For those considering gold as a pathway to wealth, it's crucial to understand its cyclical nature and how it fits within a broader investment strategy. The key is to buy when prices are lower, often during economic stability, and potentially sell when markets are in turmoil and demand for safe haven assets rises. This requires patience, a keen eye on market trends, and an understanding of geopolitical events that could affect gold prices. While the timeline to become a millionaire from gold investments can vary widely based on market conditions and the amount invested. Typically, it could take several decades of consistent investment to achieve this goal. Gold's historical stability makes it a wise choice for those looking to preserve capital over the long term rather than seeking quick gains. Section 4. Real estate. Real estate is one of the most traditional and popular routes to building wealth and potentially becoming a millionaire. It's a tangible asset like gold, but comes with the potential for both capital appreciation and regular income through renting out properties. Real estate investing can be highly lucrative, but it also requires knowledge, effort, and sometimes a significant initial capital. There are several ways to make money in real estate. Buying residential properties to rent out is a common strategy. The income from tenants can cover mortgage payments and property maintenance, with the surplus generating steady cash flow. Over time, as you pay down the mortgage and if property values increase, your equity grows, building your wealth. Another strategy is commercial real estate investment, which often yields higher returns than residential properties, but comes with higher risks and larger initial investments. Commercial properties can be anything from a small storefront to a large office building. The key to success in commercial real estate is location, quality of tenants, and the terms of lease agreements. Flipping houses is another approach where investors buy properties, often at auction, that require renovation and then sell them at a higher price for profit. This strategy requires a deep understanding of real estate markets, renovation costs, and timing. The profit can be substantial, but so can the risks, as market downturns can erode all gains if timing is wrong. Real estate investment trusts or REITs offer a way to invest in real estate without having to buy or manage properties directly. REITs are companies that own or finance income-producing real estate across different sectors. They offer regular dividend payments and the benefits of real estate investment without the management responsibilities. Real estate requires diligence and research. It's crucial to understand the market dynamics of the area where you invest, assess property values, and stay informed about economic factors that influence real estate markets. Successful real estate investing often involves networking, ongoing education, and sometimes partnering with experts like real estate agents, lawyers, and fellow investors. Whether it's flipping houses or owning rental properties, real estate has created countless millionaires. This path requires capital, knowledge of the market, and patience. Returns can be substantial, especially if you manage to tap into an up-and-coming neighborhood. But unlike the lottery, it's definitely not overnight. Typically, becoming a millionaire through real estate investments can take anywhere from 5 to 25 years, depending on the type of investment, location, and market dynamics. Investors who are successful in real estate often leverage their initial investments to acquire more properties, accelerating their path to reaching the million-dollar mark. Section 5. Stocks, index funds. Stock market investment, particularly through index funds, has been a proven pathway to wealth for many individuals. Index funds offer a way to invest in a broad segment of the stock market without the need to directly buy and manage individual stocks. This type of investment reduces risk through diversification and mirrors the performance of a particular index like the S&P 500. Investing in index funds is appealing because it involves less complexity compared to picking individual stocks and has historically returned about 7–10% annually, depending on the market conditions. For someone investing a consistent amount monthly and leveraging the power of compound interest, reaching the $1 million mark can be achievable within 20 to 30 years. This time frame can vary based on how much you invest initially and regularly, and how the market performs over that period. The key to success with index funds is consistency and patience. Regular investments, reinvesting dividends, and staying invested over the long term, even during market downturns, are crucial strategies. Warren Buffett, one of the wealthiest individuals in the world and a staunch advocate of index fund investing, famously said, "Our favorite holding period is forever." He suggests that the buy and hold strategy not only reduces transaction costs, but also maximizes potential returns over time. For beginners and those looking to build wealth with a hands-off approach, index funds provide a relatively safe and predictable method of investment. It requires setting up a regular investment plan, such as a monthly direct debit, and then periodically reviewing the investment to adjust for any major life changes or financial goals. This method won't make you a millionaire overnight, but it is a reliable route to accumulate significant wealth over decades. Section 6. Treasury bills, notes, and bonds. Treasury securities, including bills, notes, and bonds, are some of the safest investment vehicles available. Issued by the government, these instruments come with a guarantee of repayment and offer a fixed rate of return. While the returns are lower compared to stocks or real estate, the risk of losing your principal is minimal. Investing in Treasury securities is often seen as a preservation strategy rather than a growth strategy. The annual returns can range from 1% to 3%, depending on the length of the term and the interest rate environment. Given these rates, becoming a millionaire solely through these instruments can take several decades, often 40 to 50 years or more, depending on how much capital you initially invest and the specific types of securities chosen. The appeal of Treasury securities lies in their stability. They are an excellent choice for those who are risk-averse or nearing retirement and want to preserve their capital. Alan Greenspan, former Federal Reserve Chairman, once highlighted the reliability of Treasuries, noting their role in a balanced portfolio as a safeguard against volatility. For investors who prioritize safety over high returns, Treasury securities offer a solid option. They can be part of a broader investment strategy, providing a stable foundation while you pursue other, higher-yielding opportunities. Like other forms of investment, the key to success with Treasury securities is strategic planning and long-term thinking. They aren't likely to make you a millionaire quickly, but they can ensure that the wealth you accumulate in other, riskier investments is protected. Becoming a millionaire is a dream for many, but as we've explored today, there are various paths to achieve this goal, each with its own set of risks and timelines. From the lottery's long odds to the steady growth of index funds and the security of Treasury securities, understanding your options is the first step toward financial success. Whether you're looking to make a quick fortune or build wealth gradually, the key is to choose the strategy that best aligns with your financial situation, goals, and risk tolerance. Remember, while the journey to $1 million might be different for everyone, the underlying principles of smart investing, consistency, patience, and diversification hold true across all methods. Thank you for joining me today. If you found this guide helpful, please hit that like button and subscribe for more financial insights. Don't hesitate to share your thoughts and your own journey towards financial freedom in the comments below. Keep working towards your financial goals and be kind to the others. Until next time, keep investing in your future, and let's make that millionaire dream a reality.